Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our Stock Monday buys here on the 7th of December 2020. We're going to quickly take a look at stock futures up on the screen now. Then we're going to be jumping over into the M1 Finance Roth IRA portfolio, taking a look at the overall performance of the account, taking a look at our top 3 winners, our top 3 losers, take a look at our performance over the past week in comparison to the main indexes. Then in this video, we're going to go ahead and cancel out our current deposit schedule in order to deposit the last remaining amount to max out our Roth IRA. So we're going to be completely maxing out our Roth IRA today, and then we're going to be investing some capital into one stock here on today's video. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so stock futures are looking pretty negative, but they have popped up slightly, so we may start off in the negative here on Monday, but we may run up depending on how the market goes, what sort of news is out there. We may start negative and move our way up positive. Last week the indexes were up 1.67 for the S&P, the Dow Jones 1.03, the Nasdaq 2.12. So overall the indexes were positive last week. Now jumping over into the M1 Finance portfolio, we can see that overall we're up around 45%. This is money weighted return, and we're about to break about $6,000 of market of total gains. About $4,100 of it is market gain, and our earned dividends, these are stocks that we've sat through their ex-dividend and we have earned that dividend, is up at $1,709. Now earned dividends is not the same as paid dividends. Earned dividends are just dividends that you're going to be paid in the future. You just may not have hit that pay date yet. Now looking overall at our gains, what are our top 3 winners? We have Eaton Vance up a whopping 218, Apple 215, and followed by ABM Industries 83.89. Now our top 3 losers are down in the retail sector or in tobacco. So here we have Simon Property Group down 50%. This is a real estate investment trust with retail shopping centers. Waco Group is a retail business that sells shoes and other products. We have Altria in the tobacco industry, Walgreens in retail, Chevron in oil, and actually overall we're pretty positive that Tanger Factory Outlet has now broke to the positive. This one at a point, I believe it was down 50%. Tanger Factory Outlet had been at one point worth about $300 or $400. So for it to be now up to $938 and in the positive, that is very good. Eventually, while holding these ones through this whole illness in this period, eventually I believe Chevron would be actually a really good opportunity to buy more of, and I believe this is the one we're going to be buying in this video, but I'm going to go ahead and showcase some of their fundamentals of why I'm looking at buying Chevron versus the other ones that are currently in the negative in the portfolio. So that is the overall performance. Now if we take a look at the 1 week performance, this portfolio gained about 1.95%. So it gained came pretty close with the Nasdaq, but didn't quite beat out the Nasdaq this week. But overall, I still think it would have really positive swing. Now, this comes in part due to Walgreens. Now, Walgreens, I thought it was a bit risky due to Amazon moving into the pharmaceutical area where they're delivering, but overall, it looks like other investors are kind of maybe looking at Walgreens as now an opportunity. Walgreens, to me, it has been valued for quite a long time, but it still moved to the downside during this illness with the closure of all these retail businesses and maybe everyone having been kept inside. Maybe they're not going out and shopping at Walgreens. Maybe they're not having to take medications because they're not getting as sick. Or if they do get sick, they go to the hospital to get checked out for the illness just to make sure they don't have that versus something else. So that could be affecting Walgreens, but it looks like it is popping to the upside, up 11.3% last week. Simon Property Group, again, these are two of our worst performing companies in our portfolio, and now in this past week they've popped by the best. They had the best performance. Then we have Cisco and Pfizer doing really well, followed by Tanger Factor down there. So overall, some really good retail, some REITs, and pharmaceutical right there with Pfizer. So interesting performance there. Our worst stocks for the past week were Waco Group, again, retail and shoes, Stanley Black & Decker. Kind of interesting to see this one down 3.29, and utilities. I remember seeing utilities in our stock market weekly recap. Utilities had been beat up here in the short term. This past week, I saw a lot of utilities actually beat up. So we saw UGI pretty beat up, Consolidated Edison beat up, Southern Company had been beat up. I don't think I own the Southern Company within this portfolio. Oh yes, I do, right there. So it was actually pretty positive. I remember seeing that, but most of the other utilities had been pretty beat up. Now, as far as activity goes, we bought one stock last week. We bought 3M. It is maxed out of where I want it to be now. We have a little over $1,200 invested in 3M, so I'm not going to be adding any more capital into that one. And then we had Pfizer paying out $11 and some change there in dividends, so $11.03 were paid out as a dividend within the portfolio. So we deposited $50.23. We had $11.03 of dividends, so we have a whopping $61.26 to invest here today. Now, another thing I wanted to do in this video is showcase that if you guys have set a schedule to max out your Roth IRA, here in December, this is very important that you cancel out your schedule. Otherwise, you may come in under amount. You need at least $10 at a minimum to deposit into your portfolio. And if we look at the funding history here, let's go ahead and bust out our handy dandy calculator. Every year as of 2018, I believe, 2019, we can deposit $6,000. Currently, I have deposited $5,849.12. So that means that for the remainder here of 2020, we can invest an additional $150.88. That is the max amount that we can invest in this portfolio or in this account to max out the Roth IRA holdings. So what we want to do, or if you have a scheduled deposit, what you want to do is head over to your activity. No, it was in transfers. So click on your transfers. Once you're inside of your transfers, click on your, where was it? Was it rules? Yes, it was on rules. They've changed this up quite a bit. So you click on rules. So you click on transfers, you click on rules, and here all you want to do is either disable it by, deselecting it, swipe it off to the left. This will deselect the schedule, and you can hit done. I'm going to go ahead and turn this off until we hit 2021. Then I will come back in here, and because we'll have another $6,000 of fresh capital to begin adding to this portfolio, we're going to go ahead and set this up once again by doing our $6,000 divided by 52 weeks in a year. We're going to be moving our weekly scheduled deposits from $50.23 back up to $115.38. The reason that we did drop down to 50 was because back in March of 2020, we had that market dip of 20-30%, and I put in about $3,000, $4,000, $5,000 into this portfolio. I maxed out my own Roth IRA, and I had moved capital about $10,000 into the Fidelity account. So we had maxed out really early on here in 2020, and then once the market had recovered, we stopped adding as much, and we just kind of trickled the remainder of $50.23 in order to dollar cost average our way into the remainder of 2020. So once this is off, you'll just click done, and now it is completely done. All we want to do now is set up a one-time transfer. So here we can just click on Move Money, a one-time transfer, and I actually closed out of my my calculator here. So what I need to do here is go back to my portfolio, click on my funding history, grab this number, grab my calculator, do my 6,000 minus this amount. I need to deposit one time 150.88. So back to transfers, move money, one time transfer 150.88. We're going to be moving it from our bank account to our Roth IRA, and that is it. Go ahead and hit continue and confirm. And that is going to be it. We're going to completely max out the Roth IRA here as of maybe Monday or Tuesday. Once this equity or this cash moves into this portfolio, this should be completely maxing out the Roth IRA for the remainder of 2020. So hopefully you guys have maxed out your Roth IRAs as well. If you have, let me know down in the comment section below and I can give you a big old thumbs up. Okay, so we've got all that cleared up and out of the way. Now moving into what stock we are planning to buy. As I had said a little bit earlier, we do have a few holdings within the portfolio that are negative, starting with Consolidated Edison, ticker symbol ED, all the way down to Simon Property Group, ticker symbol SPG. Now, I had looked at Consolidated Edison 3M. We just bought that last week. I have it maxed out a little over $1,200, so I don't want to be added anymore to that 10-year factory outlet. It's actually been doing really well. I'm going to go ahead and just let it slide for the remainder of this period just because it already has $1,000 in it. We have Chevron here. Chevron is down 7.73%. It's not at $1,000. It's not as much as some of the other holdings within here. Waco Group, I'm going to let that one kind of hold out for the time being. I believe that this one still has some difficulties in it when I was checking out it in a past video. So what we're going to be looking at in this video, we're going to be taking a look at Consolidated Edison and Chevron and deciding which of these two companies that are currently in the negative is the best use of our investment capital. So we're not going to be using Seeking Alpha. Generally, I'll jump over to Seeking Alpha, take a look at what stock is coming up on ex-dividend, but we don't have any stocks in the upcoming portfolio that are coming up on ex-dividend that are currently negative. And I went to dividend.com, but the way that they redesigned their website, I used to be able to come on here, look up stocks that are coming up ex-dividend here in December, sort it by dividend aristocrats, how long they've been paying out dividends, and I went over here to do that, and this website just makes me nauseous scrolling through this, and then you can only display 5 or 10 different companies at the same time. So they've really messed up what they had here at dividend.com. So I'm not Chevron and Consolidated Edison. Let's take a look at their current price, their current dividend, revenue. Was there another revenue trailing 12 months? Yeah, we'll take a look at that one. I always like the trailing 12 months. Revenue, net income, free cash flow, earnings per share, normalize. Okay, so I think that is pretty good for now. So let's go ahead and take a look at these companies over the past years. And I'm only going to be looking here at these 3 for the time being. And let's take a look at it percentage wise. And let's see here. So that's what's the blue. Free. Okay, there we go. So right now we're looking at Chevron revenue and net income. Over the past 10 years, this company just hasn't been going to the upside. Their revenue has been decreasing over the past 10 years, about 47.43%, and their net income has been dropping by 160.4%. So overall, that's pretty negative for Chevron. Now, if we look at the current price and the dividend, let's go ahead and go back to our original format. We can see that they do offer, I'm looking at the yield. I want the yield. Whoops, that's not what I wanted there. I want it over here. Dividend yield, not the price, the dividend itself. But you can see here for the 1 year that even though Chevron seems to be trading pretty low, it actually peaked over its current. It was offering a much higher yield. For a time, a couple months ago, Chevron was offering a nearly 7.2% starting yield. Currently, it is offering a 5.53, which is below average. You can see here that if we kind of did a line through here, its average yield would probably be about 5.75, and it just kind of crossed to the upside. So while it is showing signs of recovery, we already saw its revenue and net income has been going down. If we look at its earnings per share, let's take a look at its earnings per share over the last 5 years. Here, as of 2019, it kind of peaked out. It just started dropping quarter over quarter over quarter. Its earnings per share had been dropping, and here we didn't have the illness taking place till September of 2019. So this company already had a history of decreasing earnings prior to going into what has happened here in 2020. So at the moment, Chevron does look like a pretty risky company. It has shown some signs of recovery as far as their price, but if you're looking at it long term, a lot of investors might get what's happening here in the short term as far as their stock price rising. It's not going to last forever, just because their fundamentals are failing, and we may see that their stock price does sell off here in the future. Now let's take a look at the same things here that we did with Chevron. Let's do the same thing here with Consolidated Edison. So if we're looking at Consolidated Edison here, let's take a look at the 1 year. Right now, Consolidated Edison is offering a nearly high starting yield of 4.06. You can see here that in the past 1 year, there are times where, yes, it has had a little bit higher starting yields, maybe 4.2, 4.15, but it is right now near its peak at 4.06, and its price hasn't crossed to the upside. It's still trending, not near lows, but not near highs either. So right now, its price to yield looks pretty valued if you're looking at it from that standpoint. Now, if we take a look at their revenue, net income, and free cash flow, let's take a look at them over the past 10 years. And I'm going to go ahead and put this percentage wise, and I'm going to go ahead and remove free cash flow. That just doesn't look like a pretty good one. Now, if we're looking here at net income, they're able to turn, their revenue might be decreasing. Maybe they're not bringing in as much cash into their business, but they've been only slowly declining here over the past 10 years, their revenue, but they're making up for it by changing the way that they operate their business and actually make more money income wise. Revenue minus expenses equals their total income. So their revenue may be decreasing, but they've had less expenses, and that has caused them to actually cause their net income to rise by 34.9% over the past 10 years. So overall, this one looks pretty healthy there, looking at their revenue and net income. Now, if we take a look at their earnings per share, let's take a look at where they have gone. Now, this is a utility company, so we want it to stay pretty steady. It looks like they have some highs, they have some lows, but overall, they're pretty consistent, moving to the upside here. 10 years, they're up 8.8% versus Chevron, which was going negative during this time period, 137%. Another thing we could also check out, we'll take a look at here in the end, is their dividend history over the past 10 years. Just how much do they raise their dividend? But before we do that, I want to... Oh no, that looks pretty good. Earnings per share there. So their revenue slightly decreasing, but they're drawing in more capital to keep on their books. And their earnings per share, while it is remaining pretty decent, it's been moving to the upside. And again, this utility company, so it's not one of those companies going to get wiped out or have a high income flow. It's just going to normally go about its normal business. Now here, if we take a look at dividend, and we take a look at both Chevron and Consolidated Edison, we can see that the Chevron's dividend yield change has been pretty high. It did stagnate between 2014 to 2018, but this has been pretty steady here with Consolidated Edison. Let's take a look at the max amount. So as far as the Chevron dividend, yeah, it looks like Chevron does increase their dividend a lot faster. but being an oil business, they're probably taking out a lot of debt in order to pay off their dividend. But overall, when taking a look at both of these companies, Chevron, I see that they're declining as far as their revenue goes, as far as their income goes. Their earnings per share is also on the downtrend. There's no upside to this business. Also, their dividend yield, they've already kind of peaked back from where they were at back just a few months ago. So they're not offering the best value for your dollar, whereas Consolidated Edison hasn't peaked out. They're offering a over 4% starting yield. They have rising net income, they have rising earnings per share, and they're a pretty consistent utility company. So in this week, we're going to go ahead and buy Consolidated Edison, ticker symbol ED, plus it is currently down in the portfolio, so that is just an excellent buying opportunity here. If we select it here, we can see that the only reason that we are positive as far as a return is because this has earned dividends of $37.71, kind of canceling out the negative market gain there. So we're going to go ahead and hit buy sell. We're going to go ahead and select buy, and we're going to go ahead and current cash balance. I'm going to go ahead and put in $61.21. I do have that $150.88 that I'm depositing, but I'm not going to be using that in this video. I am going to continue to dollar cost average on a weekly basis, but I'm just going to be making that one chunk deposit just to max out the Roth IRA here for 2020. So that is going to be it for this video. Let me know down in the comment section below, what stocks are you planning on buying this week? Are you buying still here at the very end of 2020, or are you kind of waiting for 2021? What do you think of Consolidated Edison versus Chevron? Do you own either one of the two? And that is it. Thank you all for tuning in. If you guys did enjoy this video, again, remember to go down below, leave me a comment. If you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray. Hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. And I will see you guys in the next video. Bye-bye.